Wednesday with Evan New and Jamal Carnett for Tech Teardown. Let's get right to headlines. Tech giant Microsoft recently reported that pre-orders for its Surface 2 models are selling out. It sounds like great news for Microsoft investors. Do you think it is?
Well, this sounds very similar to what happened last year. The first generation Surface RT models also sold out very quickly on the pre-order, which presumably meant that demand was good. But fast forward a year, and we know that that didn't turn out very well. But I think the main thing to keep in mind is how they're allocating, their inventory versus pre-orders versus a retail launch. And on top of that, I think the biggest takeaway for investors for the first generation model was I think they ordered way too many. They had ordered reportedly 3 to 5 million units, and if they just order more in line with what they think demand will be, regardless of how this pre-order does, they won't have all this unsold inventory.
So do you think it's a sign of solid demand, or is it more likely that Microsoft is limiting the amount of tablets they have to create the appearance of good demand?
Well, we know from a basic economics class that a sellout or can be a result of high demand or can be a result of low supply. So I question individuals getting too excited about this, specifically after Microsoft had said this before. So it's kind of a fool me once, shame on you, fool me twice, shame on me type scenario. I'd be a little cautious here.
Do you think Microsoft investors have anything to be concerned about?
I think that, the first generation write-down was still kind of a fresh wound, and I think that investors are still kind of questioning where they're going to go with this Surface strategy. But then again, I think a lot of it is still up in the air with regards to management, a lot of strategic changes happening. So, maybe whoever comes in and takes the CEO spot can do a little bit better than last year.
Let's move on to our next headline. Twitter just filed to go public last week on Thursday. Over the weekend, the Wall Street Journal published a story stating that some advertisers think Twitter is just plain too small to spend any money on. To quote, "It seems like there are more people talking about Twitter than actually using it." What do you think about that, Evan?
I think there's a case to be made that Twitter's user base, especially domestically, has a long way to go before it can really reach that critical mass that Facebook has gotten, especially with advertisers. Right now, Twitter's got about 50 million people in the US, and that's its really strong market in terms of monetization, whereas it's not really growing very much in the US anymore. Most of that user growth in the 218 million total number is coming from internationally. And if you keep up these Facebook comparisons, since they're going to end up competing directly, Twitter is less than a tenth the size of Facebook in trailing revenue, and only about a fifth the size in terms of just total users. So it's still a lot smaller, and I think advertisers want those network effects. They're going for those big user bases.
How does Twitter's user base compare to LinkedIn's?
Well, it's actually interesting. Both of these individuals, both Twitter and LinkedIn, have a very similar user base in terms of overall users. However, if you look at the quality of users from LinkedIn, you're coming on, it's a more professional type environment. So I think you're also going to get the benefits of the quality of the end user there as well.
Do you think there's room for Twitter, Facebook, and LinkedIn in this space? Do they have to be mutually exclusive? Can Twitter fit in here?
I think they can. I think Twitter and Facebook are going to compete a little bit more directly in terms of mobile ad dollars, whereas LinkedIn is more of a play towards the recruiting market, and they're going after ad dollars to a lesser extent nowadays. But they're still out there. But I think that Twitter and Facebook are going to be the real big competitors trying to really vie for those advertisers.
All right, let's move on to our next headline. Reuters is reporting Japanese telecom NTT Docomo saw a record monthly drop in subscribers for September. What do you make of this?
So NTT Docomo said they lost about 67,000 subscribers in September, which is notable because they just launched the iPhone in September on the carrier. And it's the first time Japan's biggest carrier has gotten the device. So you'd think that they'd get a big bump, especially because they've been losing subscribers to other carriers that have the iPhone. But the culprit seems to be inventory issues, which is what Docomo is saying. That's also curious because I'm not sure why Apple wouldn't allocate more inventory to them, because Docomo is the largest carrier in Japan, 60 million subscribers. You think that Apple would give them more inventory to meet some pent-up demand. From a technical level, the models are all compatible, so it's not like there's one model that they're just not making enough of. If other carriers have enough, I'm kind of curious as to why Apple's not giving Docomo more phones.
How do you think this will affect other carriers? What can other carriers take away from this?
Well, I'm actually taking this to a different country. I'm actually taking this to China. Right now, I think this is a precautionary tale for China Mobile. Right now, carriers compete on the basis of price and service quality. However, if you can add this, Apple is by far one of the biggest brands or one of the most influential brands. If you can add this and you can basically sell, it's going to actually lead to a competitive advantage. Right now, China Mobile does not have Apple, and we're looking forward to add that, hopefully. But right now, the other two big carriers do. So I think this should be a precautionary tale for China Mobile.
Do you think Apple dropped the ball here?
I don't know. I mean, Tim Cook is the supply chain wizard, so, I mean, there's not really enough data to know whose fault it is. But at the same time, Apple doesn't really care which carrier you're on. They don't care if you switch from one to another as long as you're still buying an iPhone. So I don't think this storyline is necessarily a negative for Apple, depending on, it's only negative to the extent that there's unmet demand. But if that's not the case, Apple's pretty, doesn't really have too much of a preference on who you're choosing.
All right, let's move on to the week ahead. Apple's likely to send out invitations tomorrow to an event scheduled for October 15th. What are investors expecting from this event?
So Apple usually sends out these events exactly 1 week in advance. The 15th is the rumored date that's kind of on the calendar right now, so that would put tomorrow as the official invite maybe going out. So investors should be looking forward to the big iPad announcement. That's going to be the headline event. On the side, we could probably see MacBooks with the new Intel processors, alongside some other refreshes that are kind of overdue, like an Apple TV. So those are probably the high-level expectations.
Is there any single product or announcement that Apple could do that would surprise you or would get you excited as an Apple investor?
Well, also, I guess, repeating what I just stated, I think that inking a China Mobile deal would be a tremendous upside. I think investors would really love to hear that. But I'd also love to hear where they're at with the smartwatch. Samsung's already out with commercials on it, and they've already gotten first mover advantage in that case. So what we'd like to see, or what I'd like to see, is what Apple's doing with that, maybe to mitigate that first mover advantage by Samsung.
Is there anything else you're hoping for out of the event?
I'm curious to see if Apple puts the Touch ID sensor in the iPad mini. The rumors suggest that they will, which would be a departure from the strategy they're using in the iPhone family, because in the iPhone, they're putting Touch ID in the high-end flagship as a way to upsell you to get you onto the high-end model. If they put it in the iPad mini, it'd be the exact opposite strategy, putting in the low-end model. I would think that they'd want to put it in the full-size iPad as another way to kind of get you up to that next product level. But we'll have to wait and see what they do.
All right, let's move on. Limping tech giant Hewlett-Packard will be hosting an analyst meeting on Wednesday. It's primarily going to be an update on the company's ongoing turnaround. What should investors look for?
So a year ago at the analyst meeting, CEO Meg Whitman really kind of laid out the turnaround strategy, really repositioned for the enterprise segment, and I think that investors are going to want an update on how that's going. Now, the shares bottomed out, over a year ago, or within the last year, and they're up pretty nicely since then, in part because I think she went ahead and took some of the write-downs that she knew were coming, so she just wanted to get them out of the way. At the same time, all the major segments are still down in terms of revenue, from a year ago, so they're still not growing. Doesn't expect revenue growth in 2014 either, so I think that investors are going to want to hear more detail and need some more reassurance from Meg Whitman.
HP shares have actually been down by nearly half over the past 5 years, and they've returned not even 5% over the last 10. How's HP done under Meg Whitman, and how do you think it's going to go from here?
Well, the shares are actually down about 10%, but that doesn't tell the whole story. When she came in, I think the stock actually even went as low as sub $15 under her tenure. And now it's up actually over 40% year to date. So investors have been a little patient with Meg's turnaround. With that being said, they recently sidelined the head of enterprise, Dave Donatelli, and also Meg basically backtracked on the growth in 2014 pledge earlier, as Evan said. So I think investors are actually going to be a little more impatient, or start to be impatient with the overall turnaround strategy.
HP has many different divisions. Who would you say is HP's primary competition?
Well, they're certainly on the PC side, they're competing with all the PC heavyweights. At the same time, that also puts them in direct competition with tablet makers, and they haven't really had any mobile device presence in a meaningful way. If they are able to kind of get that, growing again, part of what they're doing is actually taking a multi-platform approach, which actually could be incrementally negative to Microsoft, since HP has historically always relied on Windows, but now they're really trying to give Google some position within their portfolio, Android devices, Chrome devices. So if HP is successful, growing their devices category with Google's help, that could potentially be a negative development for Microsoft.
All right, let's move on to the rumor mill. According to Bloomberg, Microsoft is talking to smartphone manufacturer HTC about putting Windows Phone on HTC's Android-based smartphones. And Microsoft is possibly trying to sweeten the idea by offering Windows Phone with little to no licensing fee. Evan, do you think this is a good move by Microsoft?
I think it's kind of a move, possibly a move of desperation. If these rumors turn out to be true, it's nothing's been decided according to the report. But Microsoft's business is selling software, and if you're giving away software for free, kind of not good for the business. But it also kind of shows the disruptive power of Android because Google can rely on its services side and give the software away for free, effectively. But that's not something that Microsoft can really do because its services can't really sustain the business.
He calls it desperate. Do you think this is a desperate move?
Well, I don't think it's necessarily desperate. I think Microsoft needs to make some moves in mobile. I think they need to get as many people into the ecosystem. They need to really make a move in mobile. Absolutely. They missed this for the last 10 years. They missed a lot of opportunities. I think now trying to get a foothold any way possible into the mobile realm is probably a good play over the long term.
Do you see HTC agreeing to this?
HTC is on the ropes itself. I mean, it just reported its first quarterly loss in its entire history as a public company. So you know that they're already trying to cut costs wherever possible. And they reportedly weren't even going to do any more Windows phones. And I'm sure that the Nokia deal plays part into that because they're saying, hey, why would we make Windows Phone when you're here buying our biggest Windows Phone competitor? We're kind of not doing so well on our Android side. So they don't really have much of incentive. So I think Microsoft might be trying to they need to offer some incentives to get Windows Phone out there.
And they'll do that with the reduced licenses.
Maybe, but
possibly.
I mean, HTC isn't really in a good shape on its own right now, so it kind of needs help.
In our final rumor today, Google's Chromebook Pixel may be getting some competition. Acer is rumored to be pursuing a touchscreen Chrome OS device. What kind of market opportunity are we looking at here, realistically?
I don't think it's a very big market opportunity. Chromebooks have always historically been very low cost, $200 to $300. Chromebook Pixel came out at the very high end of this range at $1,300, and it's kind of always been this oxymoron of a device, a low cost, market segment, but super high end hardware. But Chromebooks in general have always been a very small segment of the broader PC market. In all the usage statistics that we see, it's less than 1%, if at all. And now, within the Chromebook market, now we're looking at an even smaller segment of a tiny segment to begin with. So I don't think there's a lot of opportunity here for Acer.
Does Acer's move help or hurt Google investors?
Oh, it absolutely helps Google. Although Evan's right that the Chromebook is a very small subsect in the overall PC market, Google wants to continue to grow that. So any differentiation, any type of growth they can get will be great for Google going forward.
You mentioned that the Pixel is the high end of the Chromebook market. Could you compare maybe the Pixel to the more typical Chromebook offering?
Sure. Right now, Samsung, Acer, and HP are the main vendors making Chromebooks. And again, they're really targeting this low end. They're using very affordable processors. In Samsung's case, they're using ARM-based Exynos chips. The other ones use Intel Celerons. Whereas the Pixel uses much more of a full-featured, regular voltage, desktop and laptop, Core i5 processor that you see in most laptops. So, but at the same time, they're also kind of testing the water to see if there's traction for a touch-based Chrome OS device. Microsoft is betting big on touch interface with their Windows 8, Windows RT. So I think part of this move from Google is also just to see if there's any interest in that market, and Acer's coming in here maybe and throwing their hat in the ring.
That's all for today on Tech Teardown. If you'd like to learn more about the tech stocks we're investing in, send an email to tvwar@fool.com, and you'll receive our special free report on the $2.2 trillion battle for your living room. For Evan New and Jamal Carnett, I'm Erin Kennedy. Thanks for watching.